It's been a really bad week for altcoins, but especially today with a lot of alts continuing to sell off, especially some of the on-chain altcoins, which are suffering heavily. And I'm getting a lot of questions across YouTube, Twitter, Discord about if you're in these positions, whether it's too late to cut your losses, what is going to happen over the next few weeks for crypto. Is this the beginning of a brutal bear market? Could we see a recovery? So I thought today I would come and do a Q&A where I answer all of your questions across YouTube, Discord, and X in order to give you a full overview of the market. I'm going to answer questions like, is it too late to cut your losses? What I would do with underwater positions right now, where I think the market is headed, and the coins that I'm focusing on for this next period in crypto. The sentiment has really turned even more bearish this week. I mean, it's been bearish for about a month, but especially over the past week, it's getting worse. People calling it the worst bull market ever. People saying that alts are in the depths of a brutal bear market, even though Bitcoin's at 100K, which is true to an extent. There are lots of alts that are bleeding quite heavily. One of the reasons why many altcoins, and not just alts, but also the stock market, has had a major sell-off over the last 24 hours because of some of the news that we got around tariffs, which Trump wants to implement. This is causing a little bit of worry on Wall Street, considering the potential for increased inflation. That's one of the major worries at the moment, which obviously would impede the Fed's ability to cut rates potentially. We've also had worries about earnings. Are some of the increased costs from tariffs going to be passed on to customers? That is worrying the market and has resulted in a bit of a spike in terms of the US dollar index. And clearly, altcoins were already performing bad. We'll get into why in a second, but they're performing even worse off the back of this news, which has kind of been the final nail in the coffin for charts that were holding up to capitulate through a lot of their support zones. What I will say, though, about this news specifically is that I wouldn't get too caught up on the headline itself, because the reality is every single day there's a new headline in crypto. I mean, a week ago it was DeepSeek. That was worrying everyone and causing a lot of panic in the markets, and the markets recovered. Then a few days ago it was FOMC. Everyone was de-risking into FOMC. Then it ended up being good. Markets recovered. Everyone was bullish again. Now we get the tariff news. Everyone is bearish again. There is really heightened volatility at the moment and heightened emotions off the back of all these headlines. And I mean, it is normal that we are getting a lot of headlines because Trump's just come into office. Macro does hang in the balance. There are tailwinds, but there are also headwinds. And the fact that we are further on in the cycle, we're late stage in the cycle, at least you could say that for Bitcoin potentially, this is meaning that volatility is actually increasing. This is typically what happens in crypto cycles, by the way. As things progress, volatility goes up. So the pumps become a lot bigger, like we've seen over the past couple of months at times. And then the drops become a lot bigger, like we've seen over the past few weeks. And this heightened volatility causes a lot of shakeouts when certain announcements come in. But I honestly wouldn't pay too much attention to these headlines because I really don't think news should be affecting your strategy. You should have a strategy which is outlined, which isn't affected by news. And actually, the ideal strategy in crypto, and we'll get into some strategic things in today's video, shouldn't even be dictated by price action itself, whether it's bullish or bearish. It should be dictated by predetermined conditions. So if this happens to a coin, then I'll do this. If a coin hits this level, then I'll do this. Obviously, utilizing different periods of the market in your favor in order to get your desired results. So right now, when it's risk off, preserving capital, and then when the market goes more risk on, trying to make money by playing some of the altcoin rotations. But we'll get into that slightly later in the video. Volatility in the markets fundamentally should not equate to volatility in your behavior. This was a quote from Michael today that I read, which I thought was great because I think too many people let emotions dictate how they trade. They let the day-to-day swings of the market affect whether they're bullish that day or whether they're bearish that day. If you were constantly flip-flopping, if you were optimistic 2 days ago and now you're bearish again, there's probably a little bit of an issue in your system because you shouldn't be going up and down like a roller coaster in terms of what your strategy actually is when it comes to trading. Even though it's totally okay to feel sad when your portfolio is down or really happy when your portfolio is up, The point I'm making is it shouldn't materially change your strategy. As I said here, before you enter any position, it's wise to map out your plan and contingencies based on price. So have a validation for the trade, have an invalidation for the trade. So if XYZ happens, then I will do XYZ. This can apply to the upside. So if a coin hits this level, I'll take profits. And it can also apply to the downside. If I get, 2 consecutive daily candles below this level, I'll de-risk 50% of my position. Or if the entire sector is exhibiting relative weakness and I define relative weakness as a 20% underperformance versus Bitcoin, then I'll look to de-risk on bounces. Like, these are the kind of conditions that you need when it comes to trading specific narratives and specific coins. Much better to have a conditional strategy based on predetermined black and white variables instead of relying on loose variables, aka news, which can get your emotions doing crazy things depending on the day-to-day headlines. Now, the underlying issue with altcoins, though, is obviously a lot deeper than this single headline, because they were bleeding before the tariffs news came out. That was just something that exacerbated the downside. I did a post on Twitter which I think really summarizes why it feels right now like alts are in a big bear market, even though Bitcoin is around 100K. It's kind of crazy to think about how bad the sentiment is. This is literally 2022 levels, FTX-esque levels of bearish sentiment. You could even argue this is even more bearish in terms of people's reaction in the market, because most people hold altcoins, not Bitcoin, right? Despite Bitcoin being at 100K. So I want to read out some of these points because I think it's very important in terms of understanding why the market is like it is. And to be honest, we are in a technical altcoin bear market. If you look at the overall performance of a lot of these altcoins, a lot of them are in downtrends. Now, just because they're in a bear market doesn't mean I'm following this 4-year cycle model. I think that is a thing of old for altcoins. I think the market has adapted. We're going to see pockets of outperformance. We're going to see mini cycles, bullish trends, and bearish trends within a much bigger trend. And some altcoins will go extinct within that bigger trend, and some new altcoins and certain altcoins will do really, really well within that trend. And I think this is the new paradigm we're in. Instead of saying, oh, we're in a bear market, okay, pack it up for 4 years. I think you have to look at it in terms of driving factors like liquidity and macro impacting the way the market reacts in the short term. And these factors change the way that the market behaves within these mini cycles. So as I say here, if you hold on-chain alts, in a way this crash is worse than the early bear market of 2022, so it's no wonder the vibes are so terrible right now despite Bitcoin sitting at 100K. And this is because last cycle, most people only held centralized exchange altcoins. Obviously, there were people that were in coins that went down more than others. Luna is an example of that, but most people held altcoins like Phantom, AVAX, BNB, Uniswap. Like, these were the common things people would hold. Cardano, XRP, and even though these coins went down in the beginning of the bear market in 2022, they didn't go down like 80% in a few weeks like some of the altcoins we're currently seeing behave. And that's because this cycle, we have applications like Pump Fun, which have led to the rise of the trenches. The trench game, so people trading on chain, on Solana, against each other, is 100x what it was, if not more, than 2021. People were not this on-chain in 2021, and if they were farming DeFi. They weren't getting it. I mean, there were memes and stuff, but they weren't getting in and out of coins every day, and there weren't a million coins launching every day. So because of these heightened rotations, and because the majority of market participants are on-chain, the losses are much greater when the market does turn to the downside. Why? Because centralized exchange alts are much more liquid, and there were a lot less tokens, so liquidity was less fragmented last cycle versus this cycle. This cycle, because a lot of these coins that people are holding are primarily on-chain, that's where the majority of the liquidity is. When the market sells off, and when these coins go to the downside, they sell off much more aggressively because liquidity is reflexive, meaning if tokens are illiquid and you get money flowing into those tokens, they go up a lot harder, right? They absolutely pump. And that's why in November, December, we've seen huge pumps. Even the AI pump in January was absolutely massive. You had coins 100, 200xing, pulling huge multiples in short amounts of time. But it's no wonder these charts are now starting to look like Burj Khalifa style charts of the coin going up massively and then down massively, because the lack of liquidity is reflexive. So when capital comes out of them, They go down harder to the downside. So I think the reason why it feels like we're in the depths of a bear market is because for a lot of alts, in reality, we are, because when the sell-off happened, the sell-off was a lot harder, and a lot of the people that are trading in the market now are holding a lot more on-chain alts and are trading a lot more on-chain alts than they were back in 2021. So it creates these crazy mini cycles of euphoria when things pump, and we're going to get them again, by the way. At certain times, we're going to see AI do really well. We're going to see other on-chain stuff. Maybe even memes come back and we have a meme season again. Like, we're going to get pockets of outperformance, but when they underperform, they also really underperform. Which means if you are playing the trench game, and I'll touch on this a little bit more in depth later, taking more of a trading mindset than a long-term investing mindset is probably prudent. And then save the long-term investing mindset mostly for the more solidified stuff. Now, obviously, there are outliers. So there are coins that I'm in, for example, Chintai, which I've spoken about, which is primarily on-chain. But that is pretty rare. The majority of my long-term portfolio are not primarily on-chain newer altcoins. A lot of them are either older altcoins or more solidified alts that are finding most of their trading and volume happening on the centralized exchanges. So because of the rise of the trenches and because of this liquidity effect, it's really been a trader's market. It hasn't really been a holder's market. And that's why I think there's a lot of divide right now. There genuinely are people that have made a lot of money this cycle. And even some of my calls at times have been up absolutely massively. We've had multiple 5 to 10x calls. But just as these calls go up a lot really quickly, they also retrace really quickly when they go to the downside. You got to remember that eventually every altcoin will be at zero. It's just about, in the meantime, can you capitalize? You know, I do see some comments sometimes of people like, oh, Miles, you know, what about X coin? What about this? Like, for example, Pinlink. Oh, Miles, what about Pinlink? It's crashing. You know, your coins are just going down. It's like, one, every coin in the market's going down. Two, I called that at 40 cents in the Discord and 60 cents on the YouTube. It went to $4.40. So at one point, it was a 7x on YouTube and a 10x on Discord. You really had to have made sure that you took profits during that window. And that window wasn't small, by the way. That window was actually quite big. It was weeks, obviously, maybe only 2 weeks for like that heightened period in the market. But I can give you a lot more examples, not just from me, but from other content creators and other traders in the market. When things are good, like they were in November, things reprice really high to the upside. You need to take profits on those coins because at some point you need to expect that they're going to round trip. Now, I'm not saying it's dead forever. There's a chance it comes back. There's a chance every coin comes back, right? I'm not here to make comments about one specific coin. That's just an example. But the reality is it has been a trader's market. And if you're able to capitalize during these lights on periods, you could make, and you still can make a lot of money this cycle. But you also need to switch defensive during lights off periods like we're in at the moment. And unfortunately, I think people do that a little bit too late. One of the questions I'm getting a lot right now, and you'll see it later when I answer some of these directly, are like, should I cut my losses? Is it too late to sell? I don't really understand why people are asking that question now when a lot of the coins from a technical perspective invalidated weeks ago. Like, a lot of coins broke down from the indicators that I speak and show pretty much every day on the channel. The 200-day moving average, which we have a custom one called the Money Noodle in the Mars High Club, and major horizontal support levels. A lot of alts broke those levels weeks ago. Now, there are a few, like some of the AI coins that have just broke, so I understand asking the question of, you know, should you de-risk your virtuals now? Because that's just broken down. But many other alts broke down a couple of weeks ago. So if you're using invalidations, which I recommend everyone does when they're trading on-chain stuff, or pretty much any crypto minus your long-term holding portfolio, there have been a lot of signals to de-risk. De-risking after a massive drawdown, days or weeks after coins have broken structural levels, it's not really de-risking anymore. That's just panic selling. So make sure when you're asking yourself, oh, I want to de-risk, you're actually talking about a real de-risk, which is based on your predetermined plan and not just a de-risk, which is actually a panic sell. I think people throw the word de-risk around a lot, like, oh, I'm going to de-risk here. It's like, well, you're not really de-risking, you're panic selling, because the real de-risk window, when things started to look a little bit shaky, was on many alts a couple of weeks ago. And there has been opportunities to trade in the short term in between that. You know, we had a very nice bounce, which I got involved in and actually bought some coins during the DeepSeek FUD. They bounced, you could take profits on those coins, have your high time invalidation. If they come back down, you can cut. That's what happened to me on AI16Z and AIXBT. I was forced to cut. They pumped. Then they ended up coming back down. I had to cut and I got stopped out instead of holding them. And I got stopped out at 70 cents for AI16Z, and it's now 40 cents or 45 cents. So you can see these margins, even though you might lose money technically on a trade, that's a big margin. Cutting your losses or de-risking at 70 versus 40, there's a massive difference there, almost a 50% difference. And that can be the difference between, if it's a $10,000 trade, you saving $5,000 or not. So I think it's very important to have invalidations for trades, but most importantly, actually understand when the market is shifting from lights off to lights on or lights on to lights off. Because I think the major mistake people make is not adapting quick enough to market changes. So I think when the market does change, when it goes from bullish and the bearish trend now starts to come in, you need to adapt. And what do you do when you adapt? Well, in lights off mode, so the more bearish mode which we're in right now, you've got to cut your losers fast and you want to long slow. And then during lights on mode, you want to let your winners ride and you want to long more quickly. And this lights on mode refers to periods like November last year, December last year, where you could actually get away with just longing stuff really quick, letting things ride. And then obviously you want to be taking profits on the way up. But I think now a more practical thing to do, and I think a very good exercise to do, is going through and actually answering your questions across Discord, Twitter, YouTube, because ultimately I'm making content for you guys, and what you guys think and your mindset and your questions that you want answered are very important. And I think it'll be really valuable to actually go through some of these right now. So we're going to start with some of the questions on X. Then we're going to get into some Discord stuff and also some questions on YouTube. I did a community post a couple of days ago, and I also asked in yesterday's video for some questions, and I picked a few from there as well. Obviously in the Discord, every single day I answer basically every question that people ask me. So if you are there, you can ask me a question and pretty much have it guaranteed. If it's a reasonable question and I haven't answered it before, that it'll get answered. But today I've curated across all platforms the ones that I think are most relevant. The first question is, what's the worst case scenario for 2025? This is quite a good tweet which summarizes that pretty well, and I'm mostly aligned with. The most painful scenario for everyone except Bitcoin holders would be for it to go sideways for the next few months and mark an unexpectedly slow Q1 after what was a very strong Q3. I believe that the Melania coin and Trump coin sucked a lot of liquidity out of the market and was one of the most destructive events we've had in the last 2 years in crypto. I do agree with that. I thought it was really destructive for the space. I think a lot of people were discouraged by it and it sucked a lot of money out of on-chain stuff, and that basically started the rotation out of on-chain alts. With November's altseason being mostly of the boomer/retail coins, Bitcoin's run and the AI run, too much liquidity was extracted from market participants. This obviously has exacerbated how retail feels, which is bearish right now. Too many meme coins ran up to 500 mil and never recovered, extracting millions from traders. AI coins saw incredible volatility, minus 20% followed by plus 30% for over a week, which I think burnt out a lot of people. It has been exhausting. January is one of the most exhausting years I've had in a long time in crypto. You might think, Miles, why are you saying years? It's a month. I'm making a joke. It felt like a year. I saw a round tweet that is quite funny. It literally felt like a year. Like we had the Trump coin launch, we had an entire AI meta, we had crazy dumps happening at the start of January and then pumps happening after that. Like it's nuts. We've had so many headlines with Trump. Literally nuts. I feel like I need a holiday. So I think that exhaustion is also creeping in aside from price capitulation. I think it's the exhaustion effect as well. So to directly answer the question, worst case scenario, I think it is Bitcoin continues to chop, which is a scenario that I think will drive people mad, because if they're already time capitulating now, they'll probably really start capitulating if things keep chopping. But even if it's a difficult period, I still think there's going to be lots of opportunity because things can change tomorrow. We could get another catalyst which comes and impacts the market positively. Markets could decide that this sell-off is a little bit unwarranted and things can pump. I know for a fact there are going to be certain metas. For example, RWA looks really strong right now, which perform even in light of market chop. So if you're positioned in the right assets and you're trading the right assets, there's always a bull market somewhere. Especially if you're more of a trading focused person and you're just looking for new opportunities, which is something I present a lot of on this channel. And I think that's also where sometimes there's a disconnect between me and my audience. A lot of the audience wants to just hold stuff. I am a little bit more of a rotationary trader. And for that reason, I think some people, they just long coins I speak about, they might go up. But then when they round trip, people will be like, oh, I'm down on this position. Now I've lost money. What do I do? When I might be trading that coin or have invalidation for that coin, which I do state a lot of the time on the shows. I always talk about invalidation and risk management, but I think there's a lot of people that aren't implementing that. And this isn't just my audience. It's all across crypto. I've seen pretty much every content creator being attacked, everyone that's been bullish on crypto being attacked. And that's not always because people have had bad calls, because if something goes up and then goes down, is it really a bad call? If you've had a window to profit, I actually think a lot of those calls are good. Even if something I talk about goes to zero, because all coins are eventually going to zero. If it does a 5x in the meantime, and you have many opportunities to take profits on that coin or rotate it to something else, is that a bad call? You've got to answer that yourself. I personally don't believe it is, but maybe I'm wrong because I'm more of an altcoin, focused trader, and that's how I make money, and that's how I have an edge in the market. The other way that you can get an edge in the market is just by holding long-term stuff, sitting in it. If you have a lot of conviction and it's a good quality project, you'll actually probably come out ahead if you can brave the storm right now. But to answer this question directly, I think the worst case scenario is chop, but there is uncertainty on both sides. There are bearish catalysts, which you can see here. There are bullish catalysts, which you can see here. And this can change day to day. I generally feel like the market right now is a little bit too bearish. Now, this doesn't mean that it's bottom necessarily, but my gut feeling is that this is a Sunday sell-off and we'll probably see an early week mean reversion. Typically, a lot of the pain that happens in crypto when the markets are anticipating a bearish stock market open happens on the weekend, and then markets typically rally at the start of the week. Similarly to when we're in a bull run and positive stuff is expected on Monday, often markets rally on the weekend and then dump on Monday. So in a bull run, you get Monday dumps, and in a bearish market, if you get a sell-off based on anticipation of a certain news event or a stock market drop, you often see the pump happen on Monday and the de-risk happen on Sunday, which is why I'm not capitulating right now ahead of what I think is potentially going to be a mean reversion for the market. Now, I could be wrong and it might keep going down, but I'm not really playing short-term games with a lot of stuff at the moment. Like, I've cut positions on a variety of coins that have been invalidated on a lot of trades over the last few weeks. I've got my nice stablecoin stack, which I've spoken about a lot. And then I've got my long-term stuff, which I'm not really touching. And in fact, a lot of my long-term coins don't look horrible right now. Solana still looks pretty good from a high time frame perspective. Chex looks remarkably good as one of my RWA picks, considering a lot of on-chain stuff has sold off. Some of my other long-term stuff, like ENA, okay, it's had a drop, but it's okay. Link, yes, it's had a drop, but it's okay. This stuff isn't really what's getting slaughtered. What's getting slaughtered is the rotationary stuff, which I think can be prevented a lot of the time by having more of a trading mindset on those specific coins versus holding forever. And you can even go back and watch some of my content around AI altcoins when I make these like AI portfolio videos, or when I speak about these coins. I do say many times, I remember saying in my AI content that the winners right now likely aren't going to be the winners forever. So what you want to do is have capital on the side to play some of the newcomers, and you always want to have risk management in place because they are by nature riskier. And I know a lot of people listen to that advice, but I just wanted to reiterate the point because there's going to be a time where we see another hot meta, and I really want to make sure you have your strategy in place for that. So moving on to the next question. Trading seems to be a better option than holding these days. I pretty much just answered that. But for me personally, I've kind of moved to more of a 50-50 portfolio split. So 50% liquid spot and 50% active trading. So I think as the cycle has progressed and these rotations have become even more violent, I've realized the need to have more capital on the sidelines to take advantage of opportunities. And also, if you want to be exposed to the upside of a trade, but not have the downside, you can enter an idea. And if you have invalidation on the downside of that idea, you can still get the entire upside. Like, I'll give you an example on a coin like, Virtuals. Let's say you longed on the retest of the breakout here and your inval was below. You could ride this entire upside wave, getting in on pullbacks without having to cop the downside by like continuously raising your stop and then getting invalidated potentially, once here and then twice here. And you'd still be in profit. And obviously, if you laddered out and took profits on the way up, you would have made even more profits. So if you want the upside to a trade, but not the downside, or a sector specifically, you don't just need to blindly bag hold a coin. You can still get the upside You just need to implement risk management. I have a bit of a tip as well. I think it's good to think about positions. So a long position, a short position, a trade, a long-term hold as a positional bet. Think of it as a bet. Think in bets. Don't think in like, oh, I'm adding this to my portfolio. Think about that coin, buying that coin at that specific level as an individual trade. Even if you're buying spot of a certain coin, all you're doing is effectively trading that coin. What changes is the time horizon, right? Everyone's trading in crypto. If you plan to take profits in 6 months, you're still planning to trade, but it's just a 6-month trade instead of a 1 day or a 2-day, day trade. So I think it's important to know the time horizon on those coins. And the best way to do this is think in terms of bets. So I'm betting on this coin because of X, Y, and Z. This is the level that I'm betting at because of this, and this is the level that I'll de-risk, and this is the level where I'll take profits. So I know that strategy doesn't suit everyone. If that's you, then you shouldn't even be playing the rotation game, and you should be focusing more on just holding really quality stuff you have conviction in long term. And if you are in a lot of those coins, I think a lot of you wouldn't be panicking right now, because if you genuinely have conviction in the thesis and the price goes lower, then your thesis should actually improve. Why? Because if you believed in it, a coin at $20 and now it's at $10, theoretically, now it's a better bet. It's a higher EV trade at that level than it was at 20 if the fundamentals remain constant. But I think what dips do is they expose whether you actually have conviction in an asset. And even for me, this dip has made me realize intrinsically there aren't that many assets I'm bullish on in the space long term. There are actually very few I want to hold long term. We'll speak out some of them later, but I've already touched on a few today and in the last 2 videos. Most coins in crypto are actually trades. A lot of people just tell themselves they're long-term holds because it feels nice. Oh, I'm investing in this. But in reality, you're not investing, you're just trading it. So if you're going to trade it, you may as well have some risk management around that and not convince yourself that you're holding it for the long term because you believe in it and then capitulate it when the market goes down. Moving on to the next question. This one was in my Discord. DJ Mav says, after watching your latest video, I have a doubt. Of course, this is always a dichotomy and dealing with it is an art because there's no perfect answer, but it's interesting that you opened up the video emphasizing how the market has rewarded taking profit early, meaning right away for the last few months with altcoins has been to exit when the market was hot, meaning the right way to play it for the last few months with altcoins has been to exit when the altcoin was hot. But you finished the video by saying, let your winners ride. Well, how do you go about this? Because this is directly contradictory to what we've seen play out in the market in 2024. So this is where there's nuance. It's always better to take profit early than too late, but taking profit is incremental. So when I say take profit, right? I'll use the virtual chart as another example, but you can use any chart that's gone up, any coin that I've mentioned, like Pinlink, EMP, Neural, any of those older coins that I've mentioned that have gone up, LMT, which went up massively. Yes, now it's retraced, but at one point it went up massively. Edge, etc., that also had massive pumps. This applies to all of them, but I'll just use virtual as an example. As the price goes up, you want to be laddering out. So when I say take profits on a position, I'm not saying dump that position. Take profits incrementally over time. So at a 2x, you might take 50%. You might take 20% per every additional 2x or every additional 50%. The increments and how aggressively you take profits depend on the coin, the risk of a coin. So if you're taking profits on the way up as price goes up, yes, the initial profit taking might be early, technically early, but overall you're going to get an average price that ends up being pretty good for your TP zone. So what you're asking here is, okay, but then how can you do that, take profits early or take profits as it goes up, and also let your winners ride? Well, what I mean by let your winners ride is coins where the price is going up, you're not trying to fully exit. You're always trying to hold a moon bag. Now, how big the moon bag is depends on how bullish you are. If you are really bullish on virtuals, maybe your moon bag would be 50%. So you're taking profits as it goes up, but you're keeping 50% of your principal value untouched at today's prices. So if the price is 5x since your original entry and you put in $2,000, so it's $10,000 worth of total value, maybe only half of that, so $5,000, you actually exit the market at that value, and the other $5,000 you keep in the market. This is what I call letting your winners ride. So yes, you're taking profits as they go up incrementally. You're getting an average exit, but you're letting them ride. Yes, it is better to take profit too early than too late, but this should be an incremental process. But the other part of this equation is cutting your losses quick. So when a coin goes down and breaks your invalidation, if it's a losing coin, just get out. So basically you want to get out of weak coins quick and you want to get into and stay into strong coins. So it's not really dichotomy, it's more a matter of looking at relative strength and relative weakness of certain coins. If a coin has relative weakness, you're trying to cut your losses quicker than a coin that has relative strength. You're still taking profits, but a full cut your losses is 100% or 80% out. Whereas, as I said, with something like virtual, you're only laddering out incrementally over time. 20%, 20%, 20%, 50%, 50%, 50%. Depends how aggressive you want to be, right? So you're still letting your winners ride. And if it's a real winner, you can take even less, right? And if it's just performing really well and then on the signs of a reversal, so the first lower high starting to form on the daily, for example, then you can take bigger profits because, okay, now it's reversing. So that is the way I would go about it. You're right. It does require a lot of nuance, but profit taking is not an easy thing. That's why a lot of people don't do a very good job at it. But generally speaking, I think the best approach in the market is to take as much profits as you can, as aggressively as you can. So although you do want to let your winners ride, I've never regretted taking profit. I mean, there have been times where, so I sold Mantra too early. Okay, I might have put that money into checks and other coins, which has done well, but I still sold materially, right, at maybe $1.50, $2, and now it's at $5.50, and at one point went to $6 to $7. But I don't regret that because I still made money. I got in at 40 cents and wrote it up to $2. So whether it goes from 2 to 5 now, I'm not kicking myself, right? I still made money. So that's an example of, okay, I sold early, but I'm still happy. Whereas if I bought it at 40 cents and it went down to 10 cents, I'm not going to be very happy. So it's better to actually cut too early than cut too late. You want to cut fast. And that's kind of where the saying comes in. Which sector do you think will have the highest risk-reward ratio in the next few months? I personally think it'll be utility coins. 100% agree with you. I think over the coming months, if we do see a bullish February even, which still could happen, by the way, we're only a day in and everyone's freaking out. I think the highest conviction sectors are probably AI agent infra, good quality infra. I don't think it's going away. RWA, DeFi AI, DeFi utility. RWA specifically looks very, very good. Like this checks chart looks ridiculous. Ondo, OM, ridiculous. A lot of these coins just don't look weak. If you compare these to like memes and stuff, they're like down here already. But a lot of these coins are still above their moving averages and above key levels, which is a very positive sign. And it's a sign to me that if the market does pick up, these coins will rally the most aggressively. You have Lido, that also looks pretty good. This is like an ETH DeFi beta play. You have Jupiter, which doesn't look bad. So these utility coins, I think, will perform well. Touching on AI agents in a little more depth for a second, I pretty much think what's happened with agents is they had a real bubble in the early days. A lot of that like bubbleness has been flushed out of the market like we discussed because a lot of these didn't have a lot of liquidity. There was too many of them. And over time, the good ones are going to rise to the top whilst a lot of the other stuff's flushed out. So I think and there aren't many in the market right now, but solid AI agents at massive discounts actually represent decent DCAs in my opinion. Now, obviously, how you enter these coins depends on your strategy. If you're waiting for lights on mode, you could simply wait for a reversal. So instead of trying to catch a knife on virtual, you could say, okay, I want virtual, but what I'm going to do is I'm going to wait for a confirmed reversal, then I'm going to get in on the pullbacks. Or you could say, okay, well, I'm going to wait for a bigger flush out to the next support, and then I'll buy. Then I have at least inval below that level. So just because, I say a coin's probably a decent DCA, it doesn't mean, okay, DCA now. You still want to implement technicals if that is how you trade. If you're just happy to just DCA slowly over time, that is your other strategy as well. You might think virtuals is a great longer-term play. You might think AI16Z or AIXBT are great longer-term plays. I don't think many of these are going to be, but I think a few of them could have a strong shot at being very necessary infra for a sector which I think is still revolutionary, not going away. Just because prices went down doesn't mean it has any less impact on how we trade. Anon, for example, on the 7th of February, which is this Friday, is launching its beta for their application, which allows you to do a bunch of on-chain actions just using a chat interface. So you could say, hey, bridge $10 of Ethereum from Ethereum to Base and then swap that for this coin and then stake it or, bridge it to this chain. Like, there's no more going onto Binance, withdrawing $100 to Arbitrum, then going onto a bridge site, waiting on a bridge. Oh, I forgot my gas. I'm going on Binance. I'm going to put $10 more gas on. Okay, now I've got my gas. Now I'm going to bridge it. Oh, I'm short of gas. Let me add more. That often happens. Okay, now I'm bridging. I just paid a huge fee, but that's all right. Now I've got the tokens. Okay, where do I swap? Oh, now let me go into CoinGecko. Let me look at the markets. What has the most liquidity? Okay, this does. How do I actually use Uniswap? Okay, that's right. I remember how to use it now. I got to set my slippage. Oh, transaction failed. Why? Oh, I don't have enough gas. Okay, you got to bridge more gas again. All this stuff, like literally, that's probably quite relatable to you if you've used DeFi. All this stuff is so tedious. It can take an hour to buy a coin sometimes. With applications like Anon, and this is why I think AI will be so revolutionary, and I don't think it's a short-term fad. You will literally be able to speak to an agent or a chat interface and do anything on-chain with just messaging. Hey, buy this for me right now. It's even simpler than Telegram bots, which you have to configure. And this is only the beta. Like, as these products roll out and get better, the amount of stuff we'll be able to do will be mind-blowing. Hey, stake for me, then automatically recompound it every 2 weeks, put the profits into this, then stake it in Ondo so I can earn treasury yields, and now take those 5% yields, put them back into Solana. Every time Solana goes up 10%, take 10% profits. Like, it'll actually solve the risk management problem a lot of people in the space have, because it'll be able to risk manage your portfolio for you, your DeFi. So applications which are building this and are going to be home to it, and I think Anon has a shot of being one of these applications with what Danny's building. I've spent hours on the phone with him. His vision's absolutely amazing. I think coins like this I want exposure to longer term. So as I said before, you can play the technicals. You can wait for a reclaim. You can get in on a show of strength. You've got the moving average and the range low. You can DCA in. It depends on your strategy, right? But I did want to make the point here today that I don't think agents are over forever. Yes, a lot of them are down, but a lot of the agents that were down are just chatbots. Like, not a lot of the protocols have a lot of substance. Like, even AI16Z, which I de-risked here on this breakdown and this breakdown, and I spoke about that a lot in the Discord. I answered many questions about that, and I also spoke about it on the YouTube. Even this doesn't really have great tech, but it is a market leader. So if it came back, I would happily get back into a trade on a show of strength. But I don't think this has like market leading tech longer term, although the fundamentals are interesting, right? AIXBT is kind of similar. I don't know, beyond the short-term wave it had of mindshare, I don't know if it has that much long-term impact on the space. Things like Anon and Virtuals even, they could. But there'll be a lot of new ones that come out and perform really well. Mode is another one, by the way, that I want to highlight. I showed these charts on a lot of shows, so people might comment, oh, Miles, what about Mode? Look at how down it is now. Guys, my charts are public. I show them on a lot of shows. Now, sometimes I might add lines or add levels based on price action, but this I showed when the price was here, right? You saw this trend line. You saw this trend line. You all have access to moving averages. Yes, this is a custom one from the Discord, but the 200 or the 100 will also work pretty similarly depending on the time frame. You would have seen the first breakdown, the second breakdown, the retest, which was a daily retest, which gave you a chance to offload before it went down 48%, or the secondary move of 37%. There were two clear opportunities to de-risk. Now, long term, do I think this comes back? I think it could, because I think it has strong agent tech, but just because you think something could do well long term, just like AI16Z, doesn't mean you should ignore the technicals. So this would save people a lot of pain. I personally had to de-risk on this retest here a portion of my position. Now, of course, I'm keeping a portion long term because I think it could come back, but I was forced to de-risk. I don't know the exact amount. Maybe it was half. So you do have to keep this in mind as well. Even if you believe in something, have a technical invalidation. It'll save you a lot of pain. I'll even speak about a coin like EMP. This was one of my picks for the agentic bull run, and I called that at $50 in the Discord, and I also spoke about it on YouTube for the first time at 80, and it went up to 500, like a 7 to 10x play depending on what platform you're on. But it had one breakdown here and then another breakdown here, and even at the top, right, it had this pattern of lower highs and then lower lows starting to form, which is a clear reversal signal. This is an inverse head and shoulders pattern. Well, no, not inverse, sorry. It's a head and shoulders pattern. So like all these technical signs, I'm not saying TA is the be all and end all. It's not, but at the end of the day, it's just a momentum indicator. You have sign after sign after sign on a lot of these altcoins for days and days and days that they were breaking down. So you have opportunities to de-risk. So I think it's just a lesson for a lot of you, and I'm not perfect with my execution. I stuffed up a lot of stuff over the past few weeks. I've definitely given up some of my gains as well. I don't nail the top because I don't really try to nail the top. I think it's a fool's game, but I think it has been a good reminder to all of us not to be complacent. A, next time we get big upside, make sure to ladder out and take profits. And B, next time there are breakdowns or trend reversals, don't just ignore the signs and bury your head in the sand and say, oh, it's a long-term trade when there are clear de-risk signs. So let's quickly go through some rapid fire questions now to end this. I've got a couple from the YouTube as well that I want to answer. What's the most unexpected thing you've learned on your journey to success? I don't know if it's unexpected, but one thing that I've learned is consistency is key. Every single day, day in, day out, you have to show up. You can't let the market conditions impact your motivation to wake up that day and research and look at and find new stuff and work on your trading strategy. You can't let the market impact your consistency. So I think over time, you'll find your stress tolerance goes up. Mine's definitely gone up. You're able to deal with days like this better, think a little more clearly on bullish days and bearish days. And the only way that happens is if you stay here day in, day out. A lot of you are going to leave now. A lot of you have already left. I've seen YouTube views drop across YouTube. My channel's dropped a lot. All the major YouTube channels have dropped a lot. Even bigger channels like Coin Bureau, Altcoin Daily, Crypto Banter. Views are dropping because people are getting bored. But these people are never destined to make it in crypto. If you just stop watching, and I'm not saying you need to keep watching my content or you can change and watch different channels. That's not the point I'm making. In general, though, if you stop paying attention to crypto just because prices are down, it's pretty dumb in my opinion. You're literally leaving at the worst time. So if you're still watching at this point in the video, you're a real one and you're probably not going to quit. But most of the people that were going to quit have already clicked off a couple minutes in because they just wanted to know what's going to happen with their altcoin bags. They don't really want to learn. They don't want to learn risk management. They don't want to. It's funny. People expect 5 to 10x, 100x gains, but they aren't willing to put in the time to learn what it takes to get into the position to make 50 to 100x gains. Or even 5 to 10x gains. I've been in this space for 6 years. I had to round trip a lot of money in 2021. Became a millionaire, could have been a multi-millionaire in 2021. Round tripped a lot of it. I'm talking millions of dollars in potential gains and 7 figures in paper losses from all-time high. And I had to go through that only to be able to maximize this cycle more. Could I have made more money so far this cycle? Probably. There were probably some opportunities where I could have made a lot. I had $1.5 million in a lucky coin position, which I never sold any of. Some people say, Mars dumped, never sold a cent, round tripped. Now, it wasn't that liquid, so even if I did dump, could probably only have got, 5 to 700K out of it. But that's a lot of money, 5 to 700K, that I round tripped. So I haven't been perfect this cycle. I've definitely made mistakes, but I've made a lot more money than last cycle. And the reason why is because I showed up day in, day out. I was making videos in the bear market, tweets in the bear market, streaming daily in the bear market. Not all of you might know this, but because I was on Crypto Banter before, but I was daily every day in the bear market, getting entries, paying attention, trading, learning. So that's probably the most unexpected thing I've learned, and just the need to just be consistent. Someone asking, my memes are down 65 to 80%. Should I hold, hope, or cut my losses? I think the time to de-risk is not really now. I mean, you've had, let's just use Popcat, opportunity number 1, lower high, lower low. Okay, now it's breaking the money noodle indicator. Oh, now it's breaking major support. Okay, now it bounces, rejects off major support. Okay, still holding. Okay, bounces. Okay, hits another resistance level. These are all just simple demand zones. Breaks down again. 1, 2, 3, 4, 5, 6, 7, 8 de-risk zones. So if you're still holding after 8 de-risk zones, alts, and now you want to sell, what do I even say to that? I don't even know what to say to that. I guess at this point, a lot of these coins look like they're going to bounce, honestly. I think some of these need to mean revert, even if it's just another one of these before it goes like this to minus 20 cents. I think we're going to see mean reversion on some memes. So if anything, if you want to be risk on, you can consider buying them now instead of selling. I would be thinking the opposite. Instead of cut my losses, okay, should I just add? Should I average down? But if you don't believe in something, then yes, I guess the best time to cut is now. But yeah, I think it's tricky at this point, honestly, to de-risk. There are some coins which are more obvious, like they've just broken down. Like if you're de-risking virtuals here, I kind of get it because it's just broken down. But PopCat, I mean, I'm not saying you hold PopCat, I'm just using this as an example, that it's tricky. It's tricky. Maybe on a bounce you can de-risk. The thing is, we might even get a bounce tomorrow. And the next time we get a big pump, we got a pump 2 days ago. De-risk on the pumps, not the major dumps. Someone here says, so I'm answering some YouTube questions now. Please don't talk about the meme coins and continue your recent discussion about a safe 3x portfolio. Realistically, the audience isn't going to rotate the way you're modeling in most of your recent videos. Yeah, but then again, like, I've got a couple choices as a content creator. I can be boring and preach Bitcoin, 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 and I'll never get any hate, right? Because Bitcoin will never go down and will probably go up. But that's not how I trade. I am an altcoin trader. I do invest in rotations. I do chop around a bit more than the average person. I can only create content on where I have an edge, and I don't want to like become a LARP trading Bitcoin every day. So I kind of have to stick to things that I know I'm intrinsically good at, and if I don't do that, then I don't think I'm staying true to myself. So even though I'm going to be prone to more backlash, because when the market goes down, I'm going to get blamed, the real people know that the biggest opportunities still are in these rotations, and if I'm able to at least hit a couple big gainers in the cycle, we've hit a few so far, and I still think there's going to be more, then if you trade correctly, you can make a lot more money on that. But obviously it comes with more risk, and that's where risk management is important. But I understand the YouTube audience doesn't want to trade and they just want to hold and watch their bags go to zero. But I actually think you'll be better off at least being a little bit more adaptive. But people are sometimes lazy and don't want to be adaptive. And that's not a shot at everyone, because some people here just don't have time. And if that's you, I've already suggested earlier in the video what I would do. I just have, actually it was in yesterday's video, I'd set major high time frame alerts on the key coins you have a lot of conviction in. And I would just have very preset but loose in terms of price, invalidation, and take profit levels. Versus like an active trader. When I say trade, I don't mean day trade. Like some of you can day trade because you've got 12 to 15 hours a day, but some of you only have a few hours a day or 30 minutes a day or less, 30 minutes a week. You've just got to change your strategy based on what you can realistically do. Kevin has a question here about altcoin dilution. Will altcoin dilution change performance so much we never have an alt season? I've discussed this a lot, but I don't even think alt season is the right framework to have. By the technical definition, we're still going to get another alt season in my opinion, but that definition is just altcoin performance relative to Bitcoin. In terms of alts going up only, I don't think we are getting an alt season in terms of everything going up at once. As I mentioned earlier in the video, we're going to see rotations, periods of outperformance. Student of Life says here, if waiting for a bounce after a Sunday dump, are you better off sticking to your high conviction plays from the DeepSeek dump? Yeah, a lot of these haven't changed as conviction plays. A lot of these are the same. What has changed is a lot of these AI coins, which I played during the last bounce. So this is my post, by the way, from 5 days ago. A lot of these bounced really hard and we did really well in these trades. But a lot of the AI coins have broken down now, so it's a little bit different. Like virtuals at the time of the DeepSeek dump was at a major support level and it bounced AIXBT, AI16Z, whereas now they've broken down, so they aren't the right plays to take at the moment. The safer long-term plays, yes. Some of the other utility-based stuff, yes. I think utility looks much better in general, but in terms of getting into AI coins now, I think on some of them you can wait for a show of strength, and then on some of the fundamental long-term stuff you can DCA in. But I wouldn't be playing many swing trades right now. I think it's a bit fundamentally different to the DeepSeek dump. The tariff stuff has the potential to spiral a little bit more than DeepSeek, which I instantly knew was just going to be a short-term fad. We saw that in terms of the bounce, right? That happened really quick, even on NVIDIA and other stocks as well. So yeah, I think it's a little bit different and I would approach it differently as well. I've been here for 50 minutes now, so I think we'll cap off the Q&A here. Hopefully you learned something. I gave some candid responses at times and some truthful responses. I mean, I'm always truthful, but in terms of just being a little bit more candid and direct today, because I don't see a reason to beat around the bush. The altcoin market is bad. But I think right now you've just got to stick in there. Honestly, like quitting now is the worst possible time that you can quit. I think, especially if you're now cutting a bunch of positions which are massively down, on a knee-jerk reaction on an illiquid Sunday dump, I don't think that's the wise thing to do. I wouldn't be rash in this market. Even if you do want to exit and you really truly are sick of crypto, there's going to be mean reversions. There's going to be bounces. It's not going to be, everything's just not going to go to zero overnight. You'll get opportunities to exit before they go to zero. But if you're really serious about exiting, make sure you use those opportunities to exit. But I think on a lot of stuff, a lot of quality stuff, it's still going to go a lot higher. The market just needs to turn. I'll see you in the next one. Have a lovely rest of your day. I'm going to go and do an AMA on Discord now, actually. See you later. Peace.